Imagine a life where your time is truly your own. A life where your choices aren't dictated by the relentless ticking of the clock or the constant demands of a paycheck. This isn't some far-fetched fantasy. It's the universal dream of financial freedom, a goal that often feels distant for many. What if I told you that with a substantial initial investment, that dream might be closer than you actually think? Today, we're tackling one of the most exciting financial questions. What if you had $100,000 right now? This significant sum, perhaps from years of diligent saving, hard work, or a fortunate windfall, represents a profound opportunity. What if you decided to take that capital and make a single strategic move that could dramatically alter your financial trajectory for decades to come? This isn't about day trading or risky speculative ventures. It's about harnessing the proven power of the market itself. We're about to introduce you to a financial vehicle that's become a cornerstone for countless long-term investors, VOO. For those unfamiliar, VOO is the Vanguard S&P 500 ETF. Simple, right? But don't let its simplicity deceive you. This exchange-traded fund is an absolute powerhouse, offering diversified exposure to America's largest and most influential companies. It meticulously tracks the performance of the S&P 500 index. Think of the S&P 500 as a dynamic snapshot of the U.S. economy's titans. We're talking about innovators like Apple and Microsoft, consumer giants like Amazon, healthcare leaders, and financial powerhouses. By investing in VOO, you're not trying to pick individual winners. Instead, you're buying a tiny slice of the entire collective success of these 500 incredible companies. It's diversification on an epic scale, all wrapped up efficiently in one easy-to-manage fund. The true beauty of VOO lies in its remarkably low expense ratio and its passive investing strategy. Instead of actively managing a complex portfolio, VOO simply aims to mirror the S&P 500's performance. This approach has consistently outperformed the vast majority of actively managed funds over the long run, making it an incredibly efficient and effective tool for long-term wealth creation. It truly embodies the principle of set it and forget it for sustainable growth. Now we arrive at the audacious challenge that forms the core of our exploration today. What truly happens when you commit a significant $100,000 to this single market-tracking fund? We're not just going to theorize hypothetically. We're going to dive deep into historical data, project future possibilities, and meticulously analyze the critical factors that dictate success or struggle over the long haul. This isn't a get-rich-quick scheme. It's a detailed blueprint for strategic wealth building. This is about understanding the profound impact of time, compounding returns, and unwavering, consistent market participation. We'll explore various hypothetical scenarios, taking into account different market conditions and economic cycles. From that initial substantial investment, we'll rigorously track its potential evolution into a substantially larger sum, potentially even reaching multi-million-dollar outcomes for those individuals with unwavering patience and conviction. Our journey won't shy away from the harsh realities of market volatility. We'll frankly discuss what happens during inevitable downturns, how emotional responses can significantly impact investment decisions, and why staying the course is often the most challenging yet ultimately rewarding aspect of long-term investing. This isn't merely about raw numbers. It's fundamentally about cultivating the resilient mindset required to navigate the financial markets successfully, turning fear into calculated fortitude. We'll dissect concepts like dividend reinvestment and consider the tax implications that often get overlooked. Understanding these crucial nuances can significantly enhance your ultimate returns and accelerate your wealth accumulation. We are here to arm you with comprehensive knowledge needed to make truly informed decisions, transforming potential anxieties into calculated confidence regarding your financial future. So, prepare yourselves. Over the next few sections, we will embark on an enlightening journey, revealing the profound potential of a well-placed $100,000 investment in VOO. This isn't merely about showing you abstract numbers. It's about illustrating a powerful, tangible path to genuine financial independence. Get ready to fundamentally redefine your understanding of long-term wealth creation strategies. If you've ever dreamed of leveraging your capital to work tirelessly for you, creating a lasting legacy, or simply securing a comfortable retirement, then this video series is absolutely tailor-made for you. We're about to peel back the layers, offering a transparent, data-driven perspective on what is genuinely achievable. This comprehensive exploration promises to be incredibly insightful and, dare I say, truly life-changing for many. We'll analyze historical performance, understand the exponential power of reinvesting dividends, and deeply discuss the psychological aspects of holding steadfastly through market highs and lows. This thorough analysis will provide you with a clear roadmap. Get ready to explore the exciting possibilities of transforming a substantial sum into significant long-term wealth using one of the most accessible and undeniably effective investment tools available today. By the end of this video series, you'll have a crystal-clear picture of the precise mechanics behind long-term S&P 500 investing via VOO, along with realistic expectations and actionable strategies. We're laying the essential groundwork for smart financial decisions, demonstrating how a single, substantial investment can truly become a cornerstone for your wealth-building journey. Don't miss a single moment of this critical exploration. We invite you to join us on this deep dive into financial empowerment. Hit that subscribe button and ring the notification bell so you don't miss any part of this compelling educational series. This isn't merely a theoretical exercise, it's a practical guide designed to empower your financial future. Let's unlock the true transformative potential of your $100,000 investment, starting right now.
All right, let's pull back the curtain on VOO itself. Understanding its core mechanics is crucial for grasping how your $100,000 will truly grow. It's more than a ticker symbol, it's an economic engine. VOO is the Vanguard S&P 500 ETF, an exchange-traded fund meticulously designed to mirror the performance of the S&P 500 index. Think of it as a basket containing pieces of America's 500 largest companies. This isn't just any basket, it's algorithmically constructed to track the S&P 500 index. Investing in VOO means buying a proportional slice of each dominant U.S. corporation, representing its market weight. The immediate benefit is unparalleled diversification. Instead of betting on one or two companies, you're spreading investment across 500 industry leaders. This significantly reduces risk from individual stock failures. And who manages this powerful vehicle? Vanguard, a name synonymous with low-cost, investor-centric investing. Their commitment to minimal expense ratios ensures more of your money stays invested and works for you. Now that we understand what VOO is, let's talk results. We're moving from definition to demonstration, examining the compelling historical performance that makes VOO a cornerstone for wealth builders. Historically, the S&P 500, which VOO tracks, delivered average annual returns near 10 to 12%, including dividends, over very long periods. This isn't a guarantee, but it's a powerful guide. Over the last decade, VOO often exceeded this average, showcasing robust growth. Imagine your initial $100,000 compounding year after year, building momentum and generating substantial wealth. That's consistent returns. Extending that to a 20-year horizon, effects become even more dramatic. Even with significant market downturns, the S&P 500 consistently recovered and pressed higher, richly rewarding patient investors who stayed. Look back 30 years, and the story is profoundly clear.
Compounding transforms modest beginnings into truly substantial fortunes. This long-term perspective is where VOO truly shines as a dedicated wealth-building machine. This isn't magic, it's compound interest at its finest. Your earned returns then earn their own returns, creating an accelerating snowball effect. The longer money stays invested, the more significantly this principle works. This brings us to another critical VOO aspect, its set it and forget it philosophy. It frees you from constant worry, minimizing active management and many common investing pitfalls. With VOO, you don't need to research individual stocks, analyze reports, or predict trends. The fund automatically adjusts to track the S&P 500, buying and selling shares to maintain its index weighting. This passive approach is a formidable defense against emotional investing. Fear and greed often lead investors to make poor decisions. VOO helps you bypass these destructive impulses entirely. By diversifying across 500 companies, VOO virtually eliminates individual stock risk. If one company falters, its impact on your portfolio is minimal, cushioned by hundreds of other market leaders. It truly simplifies the investing process. You invest your money, then confidently focus on other life aspects, knowing your portfolio is working efficiently and broadly diversified. But there's another powerful, often overlooked engine driving VOO's long-term growth: dividends. These consistent cash payments can significantly supercharge your returns, especially when reinvested wisely. Dividends are essentially a share of a company's profits distributed to its shareholders. Many S&P 500 companies within VOO are mature, profitable giants that regularly issue these payments, demonstrating financial health. This is where the magic of dividend reinvestment, or DRIP, comes in. Instead of taking those dividends as cash, you automatically use them to buy even more VOO shares, amplifying your ownership. Each time you reinvest, you're acquiring more shares. These new shares then earn their own dividends, also reinvested, creating an exponential growth loop. This dramatically accelerates the compounding effect. This powerful combination of capital appreciation, where share value increases, and dividend reinvestment is a potent recipe for long-term wealth. Many underestimate the sheer cumulative force of DRIP over decades. Over a 20 or 30-year period, dividend reinvestment can contribute a substantial portion, often 30 to 50% of your total returns. It's like a passive income stream constantly acquiring more assets. So VOO isn't just an index fund, it's a comprehensive investment strategy. It offers broad market exposure, historical resilience, passive management, and a powerful dividend reinvestment mechanism, all seamlessly integrated into one. This potent combination makes VOO an exceptional choice for transforming a $100,000 investment into a formidable financial asset over the long term, without the complexities and stress of active stock picking.
All right, so we've established VOO's incredible potential for long-term growth, transforming your $100,000 into a formidable asset with minimal stress. But every compelling story has its counter-narrative, and smart investing absolutely demands a full, unvarnished picture. Let's confront the realities. First, the undeniable downside: market volatility. The stock market doesn't just climb steadily upwards, it's a roller coaster. You'll experience dips, corrections, and even full-blown bear markets. Imagine investing your $100,000 only to see it drop to $80,000 or even $60,000 during a severe recession, like the 2008 financial crisis or the 2020 COVID-19 crash. This isn't just theoretical, it's a historical certainty. The S&P 500 has seen significant drawdowns many times. Investing at what feels like a market high can amplify these initial paper losses, testing your resolve like never before. What if you deploy your $100,000 right before a major downturn? It's a very valid concern. Furthermore, there's the lost decade scenario, exemplified by the early 2000s, where the S&P 500 effectively delivered flat or even negative returns for a prolonged period. While rare, understanding such possibilities is crucial for managing expectations. This brings us directly to the second crucial element, your time horizon and conviction. VOO is not a get-rich-quick scheme. Its power lies in compounding over decades, not months. Patience is paramount. Imagine watching your $100,000 shrink significantly during a market slump. Your gut reaction might scream, "Sell, get out before it gets worse." But succumbing to these emotional impulses is precisely how long-term investors undermine their own success. Selling during a downturn locks in losses, preventing your investment from recovering and participating in the eventual rebound. True conviction means understanding VOO's underlying stability, trusting the market's historical tendency to recover, and staying the course, even when it feels uncomfortable. Your discipline in these difficult moments directly dictates your ultimate outcome. Now, you might be wondering, why VOO when there are so many other options? Let's briefly compare it. Individual stocks, for instance, offer the thrill of potentially explosive gains, but they come with exponentially higher risk and require immense research and active management. Picking the next Apple or Amazon is incredibly difficult, and most active traders underperform the market. Then there are bonds, generally considered safer, offering lower but more stable returns. They're excellent for diversification and capital preservation, especially for those closer to retirement, but won't provide VOO's growth potential. Real estate, another popular avenue, offers tangible assets and potential rental income, but it's illiquid, capital-intensive, and often requires significant active management, unlike VOO's passive nature. What about other ETFs? Consider VT, the Vanguard Total World Stock ETF. While VOO focuses solely on large-cap U.S. companies, VT broadens your horizons globally, including international developed and emerging markets. This offers greater diversification against U.S.-specific risks, but can also introduce currency fluctuations and geopolitical uncertainties. Then there's QQQ, the Invesco QQQ Trust, which tracks the NASDAQ 100, heavily weighted towards technology companies. QQQ has delivered phenomenal growth in recent years, but its concentration in a single sector makes it inherently more volatile and less diversified than VOO. VOO strikes a unique balance, broad exposure to the most robust segment of the U.S. economy, offering diversification within that market without the added complexity or extreme sector concentration of other popular ETFs. It is truly a sweet spot for many. Finally, let's discuss crucial strategic considerations for that $100,000 investment. Before a single dollar touches VOO, ensure you have a robust emergency fund. This isn't investment capital, it's your safety net, typically 3 to 6 months of living expenses, held in easily accessible, low-risk accounts. Tapping into your VOO investment during an unexpected job loss or medical emergency, especially if the market is down, can be financially devastating. Next, consider dollar-cost averaging, even with a lump sum. Instead of throwing all $100,000 into VOO at once, you could systematically invest portions over several months. This strategy mitigates the risk of investing at a market peak by averaging out your purchase price over time. It effectively removes some of the anxiety about timing the market. Lastly, understand the tax implications. Capital gains, short-term versus long-term, dividend taxation, and the benefits of investing within tax-advantaged accounts like IRAs or 401ks can significantly impact your net returns. Always consult with a qualified financial advisor or tax professional to optimize your specific situation. This comprehensive approach ensures your $100,000 isn't just invested, but strategically positioned for true long-term success.
Building on our comprehensive approach to strategically positioning your $100,000, it's now time to transform this knowledge into concrete action. Let's talk about the practical steps to getting started, advanced strategies for maximizing your VOO investment, the crucial psychological aspects of long-term wealth building, and your specific next steps on this exciting financial journey. First, the practical guide to getting started. Opening a brokerage account is your foundational first move. You have numerous reputable options like Vanguard, Fidelity, Schwab, or even modern platforms like M1 Finance. Research their fee structures, user experience, customer service, and any minimum deposit requirements to find the best fit for you. Once your account is opened and successfully funded, whether by bank transfer or linking external accounts, locating VOO is straightforward using its ticker symbol. Simply search for VOO within your chosen platform's trading interface. Execute your purchase, deciding whether to invest your $100,000 all at once or dollar cost average over a period to mitigate short-term market volatility. Crucially, set up Dividend Reinvestment, often referred to as DRIP. This automatically uses your quarterly VOO payouts to buy more shares, supercharging your compounding effect without any further action on your part. This seemingly small feature is incredibly powerful for accelerating your portfolio's growth over decades. Now let's explore some advanced strategies to optimize your VOO journey. While VOO offers excellent diversification within large-cap U.S. equities, true portfolio diversification often extends beyond a single ETF. Consider integrating VOO into a broader, globally diversified portfolio by adding international stock ETFs like VXUS or small-cap exposure with funds like VB, and even high-quality bond ETFs such as BND. This strategy, known as asset allocation, aims to reduce overall risk and smooth out returns by not having all your eggs in one basket. Another essential strategy is periodic rebalancing. Over time, as different asset classes perform differently, your initial desired allocation will drift. Rebalancing involves selling small portions of investments that have grown significantly and buying more of those that have lagged, bringing your portfolio back to your target risk profile. This disciplined approach forces you to buy low and sell high in a structured manner. Don't overlook the significant benefits of tax-advantaged accounts. Holding VOO within a Roth IRA, traditional IRA, or a 401k offers incredible tax benefits, allowing your investments to grow tax-deferred or entirely tax-free. These accounts are game changers for long-term investors, potentially saving you tens of thousands, if not hundreds of thousands in taxes over your investing lifetime. Beyond the mechanics, the psychological aspect of long-term investing cannot be overstated. The market will inevitably test your resolve with periods of volatility and uncertainty. Maintaining discipline is paramount. Stick to your well-thought-out investment plan, even when fear or greed try to sway you. Avoid the siren call of market timing. Consistently predicting market tops and bottoms is notoriously difficult even for seasoned professionals. History repeatedly demonstrates that time in the market far outweighs the elusive goal of timing the market. Your focus should remain steadfastly fixed on your long-term financial goals, be it a comfortable retirement, funding a child's education, or achieving financial independence. These goals act as your anchor, helping you navigate through the inevitable market noise and short-term distractions. So, with all this information, what are your next specific, actionable steps? This isn't just about absorbing knowledge, it's about empowerment. Your immediate next step should be to embark on your own thorough, independent research. Don't simply take this video or any single source as gospel. Dive deeper into VOO, its holdings, its expense ratio, and historical performance. Explore different brokerage platforms firsthand. Compare their user interfaces, specific features, and support options to find what truly resonates with your comfort level. Utilize the wealth of free financial tools available online, portfolio analysis calculators, retirement planners, and investment simulators to model various scenarios and visualize your potential growth. Seek to understand the specific tax implications for investments within your country and income bracket, both in taxable brokerage accounts and tax-advantaged retirement vehicles. And if you're serious about tailoring this further, consider scheduling a brief introductory consultation with a fee-only financial advisor to gain personalized insights.
Most importantly, I want you to engage. What are your thoughts on investing in VOO after watching this video? Are you considering it, or are you already a seasoned VOO investor? Share your questions, your personal insights, your success stories, or even any lingering hesitations you might have in the comments section below. Let's foster a vibrant community of informed, disciplined investors, growing our wealth and knowledge together. Your journey towards financial empowerment begins with that first informed and intentional step.